Hello everyone, I'm Jonas and welcome to our live stream here with MetFi. So glad for all of you who are here with us this evening or this afternoon, wherever you are in the world. Thank you for taking the time out to join us. I hope that you enjoy this time together. It won't be a super long session this evening because we don't have loads of new announcements. I know there are a lot of things in the pipelines, but they're not quite ready to divulge here yet. However, we will do our lucky draw for one VIP Platinum Pass for the Ocean Summit in Dubai in November. So stay with us until that time because you might be one of the 144 lucky MetaQuiz ticket owners who will get this free 1,500 USDT value ticket this evening. So I hope that you all wait here for that and call in your friends, call in your people to come with us this evening to enjoy this time together. Well, if you were here with us last time, then you'll recall that we did a sort of a special feature on the way of whales. And in that case, we were talking about the technique called dollar cost averaging. So for any of you who missed that one, feel free to go back and check it in our YouTube channel. It's there. There's some interesting information on this sort of industry-proven method of investment. Now, allow me to stress once again that I'm not an investment expert. I'm not a financier. I'm not a banker. I'm not any such thing. However, I'm just someone who tends to be a bit of a sponge for information. I like to learn new things, to find out about things, to know what's going on in the industries that I'm involved in and the things that I communicated with. And I really love communication. I like finding information, simplifying it, and relaying it to people. So that's my whole goal. There's no intent to sort of give suggestions or to give advice. I'm not qualified to give any advice. However, I've just sort of found some really cool information from the people who really do know and sort of digest it in a simple format for all of you to think about, and mostly the whole goal about these sessions and these special features that we plan for each week is that we want you to have helpful to do with new tech, to do with trends, all of these things. They're helpful bits of information that can serve as ammunition when you want to share this opportunity, because I don't know about you, but for me, it's really very helpful to have content that comes from a variety of sources to sort of help me in processing information, to make decisions, and to share the information that I have with others. So that's the whole intent, that's the whole vision, and I hope that it's beneficial. Of course, this is just sort of take it or leave it. It's like a buffet. It's there for you. If it's helpful, great. If it's not really helpful or needful, well, I hope we had a nice time together in any case. So for this week, this actually will coincide with an upcoming blog post as well. And I'm calling this little series The Way of Whales. We have a bit of inside meaning there with MetFi and all of the NFTs and their symbolisms and the ocean and the relation between sea animals and oceans and all of those things and the general sort of blockchain space, Of course, people have been calling the experts in holding Bitcoin and Ethereum and all these things, they've been calling them the whales, So if we can learn about the way of whales, both old and new, well, hopefully it can give us some good advice. It helps us to be a little bit better equipped, better prepared in our investment decisions in the places we want to go. And that's the whole intent, just to provide some information. So for this week's session and special feature, it's The Way of Whales about HODL. HODL is a crypto term, and it's become very popular. Some people won't be familiar with it. Actually, the story goes that HODL came from somebody who's an expert in cryptocurrency sending some messages, and he actually intended to write hold, but then he misspelt it and made it HODL, and it just stuck. It became a thing, and so now it's kind of this crypto terminology, HODL, and people like to use HODL as an acronym for hold on for dear life, because that's really how it feels sometimes when when you're in markets that are very volatile, of course, crypto is a very exciting market. It's an exciting place to be, but also it's a little bit nerve-wracking at times. So in those nerve-wracking times, it's helpful to have the ability, to have the nerves, to have the patience to sort of hodl, to stay calm and to wait out the storms that may be happening. So that's the idea for this week's special feature. However, I didn't prepare something specifically in the area of crypto. I think a lot of people are quite familiar with crypto, and I really wanted to approach this more from a broader viewpoint, from a broader perspective, in terms of time-tested principles. Because there are people who maybe are not even all that interested in crypto, or maybe they haven't really delved into it, but these are people who have made a lot of money in investment for decades already. They're the ones who wrote the books on it, who created the manuals on it, who did the textbooks on it. They're the people that people tend to study when they're thinking about investment. And so this week's session, more than just hodl, is really about the buy and hold strategy, which again is not really specific to crypto. It's more of a general investing principle. And I have a little bit of information, a short sort of set of definitions about the buy and hold strategy, which is actually from Barclays, which, as you probably know, is a very, very big multinational bank based out of the UK, if I have it right. I believe I've got it right. Anyway, so buy and hold is a strategy that means staying invested even when the markets look uncertain, right? And buy and hold means committing to your chosen investments for the long term rather than buying and selling frequently. So it's kind of a holding position. It's not the sort of short version of things. And successful long-term investment is all about time in the market and not timing the market, as it's so difficult to predict ups and downs with any regular degree of accuracy. So there are a lot of people who try to beat the market. They try to sort of predict how the market's going to go, where it's going to go, what's going to happen, and all of these things, and they try to get ahead of it, and they try and buy it in the right time and sell it at the right time. But the fact of the matter is that the biggest geniuses in investment can't themselves really properly and effectively predict market trends. So some of the biggest investors of all time have actually preferred a more conservative approach, and that is looking into what are those assets, what is the potential long term, what kind of gains could be expected in that investment area, and then making that investment. There is going to be a risk, but when they made the investment and they really believe in it, they did their homework, they'll stick to it. Even if right after they buy it, the price drops, and it feels like they've made a loss right from the onset. They try to hold on a little bit longer than that. And there's one guy who's actually been named one of 4 top investment gurus of the last century, right? So he unfortunately is not with us any longer. His name is John Bogle. He's a really, really top investor, and he's founder of a company called Vanguard, which is still very much functioning in the US at present. He's a real expert, and what he said was the historical data support one conclusion, a single conclusion. To invest with success, you must be a long-term investor. So if you want to make money, that might happen, but if you want to invest with success, you must be a long-term investor. It follows logically and mathematically that buying and holding is a winner's game. So he built his whole company and his whole idea and his whole principles around this holding strategy. And he was very, very successful in it. A lot of people study him. A lot of people have sort of planned their own strategies around what this guy created. Your success in investing will depend, in part, on your character and guts, and in part on your ability to realize at the height of happiness and the depth of despair alike that this too shall pass. So the idea is that you've really got to hold your nerve. when there are swings, when there's extremes going on, if you really want to be in there among the greats, and I'm not saying this as one of the greats, I can't say that I've perfected this myself, but I'm just appreciating the principle of it and trying to relate it to all of you, in case maybe some of you are some of these future experts in the field. I'm not yet, but that's what I'm doing here. So we've got another guy here called Shelby M.C. Davis, and he's stated succinctly, invest for the long haul. Don't get too greedy and don't get too scared. So those are really two key words that tend to trip up a lot of people in the investment field. One is being too greedy. Things go, it's talking about the ability to wait for a bigger reward instead of wanting an instantaneous, smaller reward. It's actually something they study in psychology. And so in investment, the point here is that if you're willing to wait, be patient, then you will get the bigger rewards, versus if you're impatient and you just want instant gratification, well, then you're probably going to, if his face here, Carlos Slim, he's one of the richest people on the planet. He has been in the top 4 in the past. He's a very, very wealthy man, and he, me. No matter how bad a crisis gets, any sound investment will eventually pay off. It's an opportunity to increase our ownership of great companies with great management at good prices. And he said very briefly in a one-liner, our favorite holding period is forever. So his preferred approach to investment is to look at things that have potential, buying them and holding them, possibly even forever, because he's looking at the benefit from dividends of his investment, not just like the sort of getting the profit from selling at a profit. He's thinking about like, okay, if I can buy and hold something that's really solid, that's really good, and I sit on it, well, then I'll get those ongoing dividends, and that's much more of a safe space to be in. Okay, so let's look at a few examples, and I decided this evening to avoid talking about Bitcoin and Ethereum, because I think everyone knows those conversations and you talk about them a lot. Amazon and Apple and the big, huge big tech companies, but there are so many other companies that have actually succeeded that are maybe not quite as famous. Of course, you've got Tesla, that's extremely famous. I didn't include Tesla either, but I'm including a few others here, just sort of to look at the principle behind this sort of short-term versus long-term, right? So what we've got here is the company LVMH, and that's fashion. It's luxury fashion, and it's one of the top companies of recent years. And you can see here in a short-term period that over the weekend, the stock took quite a big drop. You can see that here. When you see this empty gap, well, usually what that means is that it was during the weekend, and it opened at already a big loss. Once the markets opened on Monday, it was already a big loss. So that's something that a day trader will be a little bit stressed about, right? He might have bought it when it was 892 and then opens up on Monday and it quickly slips down to 848. Well, that's a $50 drop. It's a considerable drop. But if you zoom out and you look more long term, well, it's actually not substantial at all, because that little red spot there, the little red candle on the top right corner there where my green arrow is pointing, well, that's that drop. And look at this whole trajectory here. And you can see there, right around the middle of 2022, last year, the markets took a big drop. And you'll remember that, right? And that was a time of stress. A lot of people were freaking out. It was a big loss and so on and so forth. There was a peak in the global stock markets towards the beginning of COVID, and then last year they took a big dive. Probably that was a correction. Probably they were a little bit too inflated. But when you zoom out and you look back till 2019, well, you're seeing a pretty big rise in value in this stock. And this is not some sort of, I didn't get paid by LVMH to sort of champion their stock or tell you to buy their stock or any such thing. I'm just giving some examples of famous names, where this has happened. And here you can see the overview that today, based on, I took this information off the website today from tradingview.com. There was a 3% drop. That seems substantial, But if you look at the week, the month, the 6 month, the year to date, the 1 year, the 5 years, and all time, all of it is in the green. Now that won't always be the case, but it does speak to the whole principle of more long-term versus short-term. So if you're a day trader and you're there, you lost 3%, that could be a substantial amount of money. But if you were holding it for a month or 6 months or a year or 5 years, you're talking about having a substantial gain, actually. And here we've got another example. This is NVIDIA. NVIDIA is a brand that makes graphics cards, right? It makes display cards for computers. It's very successful in the gaming industry. And now NVIDIA is enjoying quite a lot of success because of the whole metaverse trend. The Web3 and metaverse trend involves a lot of computing power, and that's what NVIDIA is specifically in. So they're really growing quite well. But if you see their short term here, it's more of a sideways sort of, it really took a big dip, at 2 p.m. and then it went up again and down again, and then it was ended up right back up where it started, more or less. So in today's trading of this stock, there was probably a lot of stress in the stock market, However, when you zoom out, it's a little different. Even then, even here, when you're zooming out, you can see a considerable rise here. And I was talking about how towards the beginning of COVID and rising up, it peaked right before 2022. And then it sunk right towards October. So there was a correction in the market. So yeah, what if you had bought it when it was 325? Well, the fact is that after that, it jumped to 475. So a nervous trader would maybe have said, oh, this is not looking good, and pulled out. But a buy and hold trader would have said, no, we're going to hold on because this is a solid idea. It's a solid investment. It's a solid space. This is going to rebound eventually. And so it did. Now, Netflix was a little bit more extreme because during COVID, it was very inflated, right? So this is a short-term picture of the Netflix stock. Again, you're seeing these wild swings within 1 day. But ultimately, in the big picture, it's not really that big when you compare it to a whole year. Now, over a year, there's a definite upwards trajectory going on. However, in the 5-year scenario, if you go back to 2015 and up to the present day, you can see a very, very big drop somewhere around 2022. And that's because Netflix, of course, really peaked during COVID when everyone was stuck back at home. They didn't go to the theaters anymore. They were watching at home. So yeah, it's natural that with market forces, Netflix would have jumped up a lot. And then once the movie theaters open up again, once is still a pretty solid investment. So it starts climbing back up again. How high it will climb, whether it will drop again, what will happen in the markets, nobody knows. But the point of the matter here is that we can, zooming out in these type of graphs, in a number of solid, good growth stocks, see that there are trends that happen, and there's certain data that lies behind 5 years. There's still been a growth over the long term. This is not comprehensive. It's not a complete picture. These are bit MBA or go to some business school to really learn about it. But in terms of some general overall principles that seem to be consistent across a number of sources, well, they say start with fundamentals. If you want to do the hodling approach or the holding approach, you need to be looking more long-term. You're not going to be maybe looking at trendy assets or maybe like meme coins or whatever. You might be looking at, well, what user base or user cases are there behind the project or the asset? Not just, is it the popular, hip, trendy thing to do right now? You probably know that a lot of the meme coins have had major dives recently. And a lot of the art NFTs that were super popular for a while have really, really dived as well. Whether they'll pick up again sometime, I don't know. But personally, I would say it's an area to be a little bit more cautious in because there are not such strong fundamentals that are underlying those things. So, start with the fundamentals. Don't get too rattled in the short term. Seek advice, but don't listen to everyone. You know, there's a lot of people, and again, that's why I keep saying I'm not giving you advice. I'm just giving you some information that's food for thought, because a lot of people are way too happy to farm out advice, and you can't base your decisions on that. And if you want to go for the buy and hold position, the longer term thing, you will really stress yourself out by going back and checking on the price of your asset every single day. Now, I can say this from experience in my little tiny space of my own investment experience. You know, there have been assets that I've bought, and as soon as you put your money down, you feel invested in, you feel that that's part of you, you get nervous, you go back and you keep looking at it and you see it, it's like, it freaks you out, you know. So when you want to do the buy and hold things, you've made a decision, stay informed and educate yourself. Buy the dip. A lot of people panic sell when things go down, but those who are real experts in the industry, they will consider dips as a buying opportunity. And of course, and this is very, very important, and it really speaks to the buying and holding strategy, you will not have the capacity prepared to lose, to part with that investment. Because if you want to keep your money 100% safe, well, the only way to do that is to not really invest it. Any investment of any kind, if it's Forex, if it's gold, if it's commodities, if it's stocks, if it's bond, whatever it is, there will be risk, and nobody's going to guarantee that your money will be 100% secure. However, if you just hold on to the cash, well, you're probably losing out based on inflation. So you want to balance that out as far as what people say. You know, that's the advice that people tend to give. So do think about what money can you put into the investment and leave there for a period of time. That would be the kind of assets or funds that you want to put into the buy and hold strategy. So how does this all relate to MetFi? Well, a lot of people who are operating in the crypto space, they're used to this kind of like quick, you know, actually what essentially is pump and dump. You know, that's what they're kind of used to. Okay, you know, hype it up, send it up to the moon, you know, and then you sell out and you get a nice big handsome profit. Well, that isn't the foundation behind MetFi's strategy. That's not how it was set up. It's not designed to be a hype project or a speculative project. The speculative project is really just gaining the value from the trading that's going on. A lot of trading. Of course, every asset benefits from a certain amount of healthy trading. However, if that's the only benefit it has, well, that's not really the value system behind MetFi. It's not designed for short-term indicators, right? It aims to build on fundamentals, to leverage solid principles, and to partner with big projects. Now, those projects, they're not even released yet, many of them, you know, so we're talking about not a few weeks, not a few months. We're talking about the more years time frame scenario. So that's what you've got to think about when you're looking at MetFi. And if you go back and keep checking it all the time, well, probably you might feel a little bit disheartened. And this is not to say anything other than just sort of drawing together these principles. Okay, what is a buy and hold strategy, and how does that relate to how MetFi was designed? Not to give advice or to say that you shouldn't question or you can't have your questions or concerns and all that. It's very natural. Everyone does that. However, it helps for us to approach it from the standpoint of what's going on here, right? And even the tokenomics to do with the MetFi token. They're designed to benefit those who share the MetFi vision and can leverage off the staking multiplier rewards function. As you've seen, if you really study the back office, if you study the DApp, it's not a quick profit situation. It's a longer term plan. And when you're going to start seeing your MetFi token pool, your staked MetFi token pool growing, well, that's more over a longer term period of time. Now, A little bit of updates from some of our partners. If you've been on the Sona protocol site, you'll see this. This is what happens on the Sona protocol site at the moment. Something's brewing. And if you didn't have a chance to look at the AMA session or the interview session that we pre-recorded with the Sona team, including the co-founder and CEO, as well as the CTO, that would be something you want to check out in our YouTube channel. It's a little bit long, but again, here we're talking about informing ourselves about what's going on and what's happening in our partners' businesses and their development and their roadmap, because that is our community's benefit. Basically, Sona is a great project that wants to document-driven ecosystem based on individual intelligence and measuring intelligence. Well, it's a long-term vision as well. And MetFi, as an sort of rebooting their community situation over at Sona sometime during this month. However, today on their website, it's talking about the story beginning on August 1st. So that's something you want to be following as well. Probably they had to slightly extend their plan there, but they are having a lot of stuff brewing over at Sona, and they are planning to reboot and communicate more with the community and inform people. So far, they've been investing all of their time and resources to where they're best used, and that is actually in the technology. If you look at the interview with them, you'll see that that's what they're talking about. Okay, so they had to sacrifice the community aspect of Sona to focus on what is really the heart of the Sona protocol, and that's technology. And our friends over at Evermoon have also recently announced their Discord, which you can see. Now, if you happen to be in the Southeast Asian region, then you are invited to fill in this form to enter a private testers round. Evermoon Alpha Game 2 test launch registration. So I don't know how much or how little the people here in this call are gamers, but this is a nice bit of information that if you are in the Southeast Asia region, as I believe some of you are, of course, as you know, Evermoon is based here in Bangkok in Thailand, so that's where their primary market is. It's a huge, huge mobile gaming market, I will tell you. Between the Philippines, Thailand, Vietnam, Indonesia, Malaysia, this is a massive, massive market. And it has a lot of movement in the mobile gaming space, and that's where Evermoon is focused. And that's where they're trying to access the gaming community with a really easily accessible gaming platform, which isn't so hard to get into. Whether, as I mentioned, we have a total of 144 tickets to draw from this week. So it's a random website that picks numbers between 1 and 144, a single number. Wait a minute. Yes, we have it. Ticket number 133 is this week's winner of a free VIP Platinum ticket to the Ocean Summit in Dubai. That's something you want to try out. Okay, we've got some really, really cool comments going down here. So, yeah, thanks for the guys there talking about how LVMH is Louis Vuitton Moet. Oh, wait a minute. I'm on the wrong thing here. You're going to see me like in depths going all the way. Sorry about that. All right. Good odds to win. Yeah, okay. Thanks, Matt. Thanks for all the nice comments, and thanks for our live chat there, folks. All right. Well, I'm going to check out the presentation once again. There it is. Once again, another plug shameless plug for all of you, early bird price that was extended all the way to the end of July from the end of June. So you want to grab those tickets as soon as possible at the site oceansummit.biz. Evening, actually, it did take us a fair bit of time, all the way to 10 size, and reiterate that of you to do it as you see best, and this is mostly intended you all can together as a family, as a community moving forward. And so we want all of you to be as equipped and as encouraged as you can to do the best you can in the spaces where you are, with the people you're with. So that's the intent for every single bit of interaction, engagement, information, all the things we prepare and share is for your benefit, to do it in the ways that will help you the most. So that is the full motivation. And so stay posted, stay informed in the Telegram and the Discord communities where we are, so that you can get new updated information. Also, once again, as in previous weeks, if any of you want any of the slides that I used this evening, well, I'm more than happy to share them with you as well, in case that can be a benefit in your own presentations with your communities and with the people that you're with. So I hope you all have a great day or evening or night, wherever you are around the world. I wish you all the best. I hope that you can all feel encouraged and boosted and in your lives and all the things you're trying to do. And let's remember that this is our collective effort, mission, vision, and focus. So have a great evening, great afternoon, great day wherever you are, and see you next time.